Last trading day of the year. And it's been a pretty good year, folks. We'll talk about Warren, an ode to the Oracle of Omaha. His last trading day. We got some news, after hour news. Brent and Dennis were scrounging the wires. We got some interesting stuff to talk about. And we'll set up next year, January 5th. Too bad Santa Claus has having some turbulence here, down 7.25, but we can always make it back, right? Buy the dip. All right, let's get fired up for the final show of the year.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, I'm going to start my New Year's resolutions early. And I want Dennis to come on the stage.
Uh-oh.
New Year's resolution. Okay?
Okay.
After consulting with a few different people, I've decided to change. You know how I'm not great at change, right? So this is what we're going to do starting in the new year.
I'm scared. Ooh, one shirt.
Yes.
I love it. I
Okay.
can focus. I know where to look.
You know where to look. Okay.
And how quickly can you change them?
Well, I mean, I could, well, it's going to take a little bit of time. I mean, you know, but let's say you want a weekly. There's a weekly.
That's pretty fast.
Yeah.
I'm pretty impressed.
I haven't designed the
Pretty
hotkeys
fast.
yet. Okay. And then, black charts, let's just take one thing at a time. Okay. Now, it's going to be, I talked to a couple different people with TradeStation. They showed me some tricks. I have the toggle bar up here with the different icons. A lot of them are meaningless. So it's going to take me some time to learn all the icons. But this is what we're going to do. I am changing. My New Year's resolution is to work with one chart for a month. And this chart is brought to you by TradeStation. Chart, analyze, customize, all in one platform. So we're going to work on it. I got some other drawing tools here. I had to take the tablet back to the Micro Center. Yeah, Brent, don't laugh about me going to the Micro Center. Chart, analyze, customize, all in one platform. That's what we're going to do. We're going to learn.
I like it for a tester, and we'll take your opinion. You guys do have, we are here for you. So give your opinions here. I wanted to lose 3. I asked to go to 2. Joel's going to 1. That's not bad. I like the 1. I like the idea of it because we can focus on what's going on. Because let's just go, for instance, to Nike. We're going to test this thing out here right now. Let's go to the chart of Nike.
I got a little treat for you already on Nike. I already put something in there.
Oh, what's it got? The cook bottom.
Yes.
Come in here for this conversation. I know we kind of went off script here, but it's fun.
This is
we got
good.
the cook bottom in there. Look at this. I like the way you're toggling back and forth too. Boom.
Tim Apple. Tim Apple bottom.
Tim Apple bottom.
They're going to talk about it in like Triple D. They're going to talk about it in like 40 years. It's going to be 2065.
So.
And they're going to say the Tim Apple, but the day that Tim Cook bought Nike stock. We had another insider purchase and a notable one last night. The president and CEO, Elliott Hill, buying 16,000 shares. That's not much, but it's not nothing. I think it's about $1 million bucks. Mm-hmm. Yeah, he bought on Monday. He bought on Monday at around 61.10. Got a little action last night right after this filing hit. This filing hit at 4:23 p.m. Eastern time. And then we got a little more action a little bit later. And then this morning, some more follow through here.
Yeah. So go back to the 90-day or whatever you want. Not the tick chart. Too much, too close. So you can see it if we zoom in. I don't know. Well, that's a yearly chart. So we got a lot of months there. Can we go, because you got like a year and a half of data. Can we do like a 90?
Yeah.
You love your 90.
I love the 90. I'm all about the 90. The 90 is like the chart. It tells you everything that's been going on lately. And it's close enough that you can see the recent action here too. So Joel's going to go to
We're
the
gonna
90.
go
I
90.
think that should be your default, the 90. That's what I default to.
Okay,
Trying to
it's
follow
set
up.
as default. It's just
Default
gonna look a
tentative.
little
Wow.
funky.
Wow.
It's gonna look a little funky.
Oh, but then it goes like that. Well, we'll figure that out.
Okay.
We'll figure
Okay.
that out, how to make it the full screen. Your last trade station how to do that. So we might not have to default to that because that looks kind of silly. So I don't know. We'll figure that out. There's a way to fix that. So we'll definitely figure that out. But what happened in Nike week and a half ago was, if you're just joining us and you've been away, not last week, Tim Cook, who is director, bought shares in the open market for the first time. We've been saying there's a potential. We don't know anything for certain, but there's the potential that this could be called in the long run the Tim Cook bottom. Tim Apple bottom. People are joking around. I know JV in the chat still owns it. I bought it that day. I've been playing it from the long side every single night. I was long it at the close again and rewarded because we get another director buy here. Obviously, CEO buying stock. So vote of confidence here. I know Karen Feinerman was on CNBC and she said this is not much of a vote of confidence when it's only $1 million. But we also saw Lily, Joel.
Yeah. Yeah.
We also saw Lily, Joel, do this, and we challenged it the same way that Karen Feinerman challenged it a couple of months ago, and we saw some small insider buys. I'm like, those are so small, they're not going to do much with it. Brentster, can you go back to your calendar and look up when those Lily insider buys were? Because I'm pretty sure they were at the end of September when we started to see the stock move higher suddenly there. So
give me a sec.
That's the date. I'm going to guess the date, September 29th.
Okay.
Can you see if you go back far enough?
I'm scrolling. Let's see. Looking now.
It's right here. Here's the day. Right here. I would
29th or 30th of September. I'm guessing.
I don't see it yet.
There was like 2 insider buys, and they were really small. And I said, even on this show, I was like, they're pretty small. I don't think, it's going to really move. The stock's been straight up ever since. So even though insider buys being small, so you can keep trying to
Someone said mid-August.
Was it farther back than that?
It was mid-August. It was August.
Okay, so I got to go further back. Just keep scrolling.
August 8th, August 12th, August 13th, August
That's the bottom.
14th.
That's the absolute bottom. Right there.
The actual CEO and chair and president purchase, David Ricks, was August 12th.
That's the absolute bottom. That was the bottom. They bought the bottom. So that was the Lily bottom. So we've seen before. So when you're trading insider buys, and we trade them all the time in the Stock Trader Network group, when you're trading these, it is important to give it context. Is it like Moskovich on Asana, who buys stock every week? That's kind of meaningless because he's always buying stock. Is it like, a stock that's, been going up, and now they're just, there's always context to it. But when stocks are in the gutter, and Lily was in the gutter back in August, the stock went from 900 down to the 600s, and then it gets the vote of confidence, it can be a turning point. It absolutely was a turning point for Eli Lilly. That was the bottom. That was the catalyst that kick-started the rally. So Nike has the same setup. I know there's people in the chat saying Nike is not Lilly. Completely agree. Lilly has been run so much better than Nike. Lilly's been run awesomely. Nike has been run like crap. But we just take it into context here. You got Tim Cook, who is one of the smartest people in the world, saying, I'll give it a little vote of confidence. Now you have the CEO buying. So now it's up 10% from the lows. There's a possibility that we might look back and say this was the Tim Cook bottom, the first one who absolutely bought the bottom.
Okay. We got, look at this.
What are you Whoa, what are you doing there, Joel?
He's writing on charts. He's circling.
Insider
I like all
buys?
this stuff.
That's
Joel
awesome,
became
Joel.
a trade station master.
I
love
that.
it. I love it. Trade station
That's
master.
really good.
Where we're cooking up something good here. Get that? We're cooking up something good with the charts.
Yeah,
cooking up something good.
You messed up my scaling, but we'll
I like it. It's good. So,
Okay.
back to the Nike chart. Joel, technical analysis, please. I said last night, this could be, I bought it, and so looks like I sell early, but I'm like, it was up $1, and I'm like, well, this could go a couple bucks. Well, it's going a couple bucks. That's kind of what it's worth, but does this kickstart something more? We have the January effect, which we're going to talk about in the second, where leaders to laggards, laggards to leaders often happen for the first couple of weeks. That sets up well. But technically speaking, there's a gap to fill here, Joel.
Yes, yeah,
Tell us about the gap.
Okay, we'll fall into the gap. First of all, first things first, we got to look at the pre-market high, right? 62.99 and 62.98 the last session. That makes me think that there's someone sitting at the point at 63. I don't know how much they have, but they're, someone's leaning on it. They're like, that's their target. That's their size. I don't know what 5, 10, 15,000, whatever. So there's your pre-market high. But if you go to the dailies, okay, you do have a gap in there to fill. You have you have nothing in here. You have the 50-day at 64.14, and then a gap fill, which JV's probably hanging out for, is 65.40. So there is some room here, but 63 is my number of the day. Just because we bumped up against it, might be a little size there. But and I lost my Tim Cook bottom in here, but we'll get it back. We'll figure it. Live and learn. That's a technical on Nike.
Okay, which segues us into potential January effect. But before we go to that, we got to talk the metals. Silver, obviously, Sunday night was blasting off, gets over $80. They can't stop themselves. To the moon, Alice, like just going to the moon and beyond. And then the dreaded rug pull. And it drops 16% in about 16 minutes. Now we get the bounce back. Silver snapping back after 2 days ago sell-off. And you're like, oh, yeah, here we go again. But whoa, wait a second. Little rug pull here last night as well as we experiment with the charts. You'll see on the pre-market chart. We'll have to figure out the pre-market chart how to show a little bit different. We're just experimenting with charts here today. So bear with us here. But there you go. We're gapping down here today. That's good to see. That's good. I like that right there. You can see the gap down that we just had. So silver is now trading down this morning approximately 5.5%. So another sell-off here. Now we're like getting confirmation that upside capitulation from Sunday night where everybody and their grandmother was going in and buying silver. Remember the intern story talking about, customer and when he was working at the bank 10 years ago. And this was
that was
silver
intern?
went, yeah.
That was intern, really?
Yeah, I was.
You never told me. You told us. You never told me.
I know I was protecting him, but it's intern. We're not protecting him. 25 to 50. This was back in like 2011. Silver doubles in like a week. Like it just went nuts. It went from 25 to 50. And he said, I had this grandma come in and she says, my son says silver is going up. I want you to take all of my money and put it in silver. And intern's like, wait a second. Hold the horses here. We shouldn't probably just put all your eggs in one basket. Talks of diversification, all the other stuff. Anyways, no, she's convicted. Your client's convicted, and you've given all the warnings. You can do it. So she took all of her money and put it in silver in 2011 at $49. And we know what happened after that. Fell to 16 and stayed in a 15-year bear market. So moral of the story is, when stocks in precious metals are flying high and having unprecedented moves, it's not always advisable to come in and put all of your eggs in one basket at the very top. And I think that's what people did Sunday night. So as much as we have the Tim Cook bottom for Nike, I believe we have the silver Sunday night top, and we'll get a better name for it, for all those traders who just couldn't help themselves out on their Robinhood platforms, just ripping and buying silver futures. So I think silver has topped out. Is it going to be the ultimate top in a 15-year bear market from here? I don't know about that. But silver with a market cap more than NVIDIA, I don't know about that either. So at this point in time, I would say silver is guilty until proven innocent.
All right, trading in the red here. We could do some retracements. I don't know where you want to figure it, the retracements from, but if you're trading, let's just concentrate on this month. I mean, that's more than the price action you had in years and years and years put together. So we'll just concentrate on the price action. To me, as long as it stays, and this is a ways away, 51.21 is where you the SLV. That's where you ended November. December's low was 51.14. So that's level. I'm gonna have to drill down on it a little bit more. But you had a great monthly high, boom. That was around the breakout level. made a low right in that area. Let's see if I can go long term on GLD. GLD kind of made a little bit lower low, but last week's close, excuse me, last month's close was 387.88. So boom, boom, boom. A lot there to look at. A lot of I would just go with retracements. If you're trading this thing and you're comfortable buying a dip, go to your daily chart, look at the retracement, see if it coincides with any daily highs or lows, and take it from there.
Go back to that silver chart, guys. Want to look at it one more time. Back to the 2011, the grandma buying the top there. Oh yeah, there it is. $15. You can circle it back in 2011 to $49 high, and back to 15, and just sat there. And actually, if grandma held on this whole time, didn't pass away in the 15 years, the silver's been in the bear market here, she would have got her money back and she'd be up about 40% by now. That's not a great return for 15 years, but it's not nothing either. So congratulations, grandma, for holding on for the last 15 years. Okay, so this brings us to the January effect, because you know what? What's had a pretty good year is silver and gold. So even talking about gold in this context, I think there's a potential that gold topped out a few days ago as well. Because if you were sitting on all these gains from gold this year, you're like, man, just get to 2021 and I'll book some of these gains, or 2021, just get to 2026 and just book some of these gains. And I won't have to pay the IRS for a full another year. That's the January effect, folks. We're leaders to laggards. Why does that happen? Exactly for tax reasons, because people who are sitting on big gains, some of your biggest gainers, have a little bit of pressure on them in the first few days of January. And sometimes that can lead to more pressure, because we got a few sellers and more sellers like, oh my gosh, the top is it. That's how it starts. So it usually is somewhat predictable that the leaders, the best stocks in 2025, lag a little bit in the first few days as they do get profit taking coming in. Now, if you are in Canada, that can actually start today. What? Why? Because Canada works on settlement, not on trade date. The USA used to work on settlement, but they changed it a number of years ago, the IRS, to work on trade date. So unfortunately for everybody in the US, you have to wait one more day before booking those huge gains in gold and Micron and all those other stocks. But keep that in mind if you are trading these stocks. I would not be surprised to see pressure come in. Maybe a little bit today if you're Canadian, but more so on the Friday when, obviously everybody in the US comes in and says, okay, now I can book the gains. So just keep that in mind. That's the January effect I'm talking about, not that small caps outperform large caps.
If you want to sell. I mean, the tax thing is definitely a factor in things, but I know it'll be interesting. I tell you right now, so far, I mean, if you're following the script, so far the Santa Claus rally, we just had a big run into it, right? So right now we still have today, and we still have the first couple days in January. We'll see, but man, we had such a nice run into it. So I don't know. I mean, look at we'll go even to the daily to look at it. And I think one of the titles for our shows last week was front running the Santa Claus rally. And and I think that's
I think you have front running the January effect happening here too, with some recent weakness, like gold starting to sell, silver starting to sell off. You might be front running that too. There's front runners everywhere. That's what they do. They give anticipatory traders go in and say, I anticipate some pressure coming in January, so I'm going to start putting on my stocks now. What other stocks, have been ridiculously strong? Well, we could go to a scanner, Brent. You could jump in and just scan for your S&P 500 biggest winners. I mean, Micron comes to mind if we're just cherry picking. Chat, let us know. And again, I usually look more so that the laggards, I'm trying to pick those up as opposed to shorting the leaders, because it's always scary to short leaders. And then Jay Rice makes a fantastic point. Sometimes the best play is to actually wait till Friday morning and see, are we seeing a little bit of this happen here now? Or as opposed to like positioning yourself into it. So you got to be somewhat cautious positioning, because I've seen it before where they actually come in and all these stocks, the leaders just gap up higher on the first day, because they're like, punish those traders that were anticipating it, and then they pull the rug. But regardless, an inevitable rug pull usually happens sometimes early January on those leaders of 2025. And the 2026 laggards, which are fun to play too, and there has been a pile of laggards, those are the potential to get a little bit of relief because they've probably been under pressure from tax loss selling, like let's realize these losses so our IRS bill is lower. And you just see sometimes in people looking, okay, this stock's really bad, I think it's going to turn around. Because it's, just the human mentality to try to side with whatever stock is weak, help the person that's down and out, help the company that's down and out. So it's not always the best way to invest, but sometimes, it's certain seasonality traits where that trade can actually work.
Like, for example, the trade desk down 68% this year.
I think it's a good candidate.
Like, for example, Lucid down 64% for this year. AI, C3 AI down 60% this year. Freshpet down 60% this year.
Ooh, nice list, Brett. I'm writing some more of these on there.
Thanks.
Keep going. Just keep going.
RH was one that I pitched to you maybe like a week or two ago. That one's down 54%. I don't know if you were super excited about that one. CarMax down 52%. Redwire, RDW down 52%. Would you say RDW is a bit of a darling?
Now, and this is one other thing I would say is you kind of want to stick with well-known names because are they going to come to the rescue and some small stock trades 100,000 shares
Cracker Barrel.
Yeah, anybody coming to the rescue in Cracker Barrel? I don't know, maybe, but I do like Cracker. Actually, I don't know. Cracker Barrel, I kind of like that. That thing's been weak as hell. I'm putting that one on there. CBRL. Man, they really screwed up when they changed that sign. Has that stock went down that much farther since they changed the sign? Was it that 2-for-1 stock split?
No,
it didn't.
No, it didn't. No.
Oh my gosh, that's just been absolutely crushed.
Let me give 2 or 3 more.
Nobody eats a Cracker Barrel anymore. Nobody likes their biscuits and gravy. What's wrong with
the square things with
that nice little
teas?
fire,
the peg game.
The peg game.
Yeah, the peg game. Don't look at
who likes what are they, biscuits and grits? I mean,
I love grits. Good. I love me a good Cracker Barrel meal. You're driving down High 75 on your way to Florida, and you see that Cracker Barrel sign, and you're like, "Yeah, baby, Cracker Barrel's exactly what I need to get through these next 2,000 miles."
Cracker Barrel. let me give a few more here. What about SoundHound? SOUN down 50%.
These are not investments. These are potential bounce trades. So we're just setting some stuff up. We're not saying it's going to happen, but you know what? Just it's being prepared. What's the definition of luck again? Where opportunity meets preparation. So we can say we're lucky, but here is the preparation. Making a list, checking it twice, gonna find out which stocks are naughty, and hoping in 2026 they're nice. That's what the preparation is all about. So we're preparing lists, and maybe we're gonna execute if we start to see that January effect start to happen on Friday. Then you start grabbing everything else on the list. You're like, oh, it's there. Ding, 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 ding. That might be the way to play it. Might be the safer way to play it. Anticipatory traders are probably already putting these trades on. Could you nibble in something? Yeah, maybe. But remember, this is the most dangerous trade because you are literally selling the best stocks and buying the worst.
Do you
like momentum traders roll over in their grave when I'm talking about stuff like this. They're like, you are nuts. But you know what? Nike had to bottom at some point in time. Tim Cook maybe puts that bottom in. So sometimes these things do bottom in January. Sometimes they turn. Sometimes these turns can lead to more buying and selling. And I think I'm still of the opinion that interest rates are going to go down the second half. Yes. A lot of these suppressed companies have actually been companies that are probably been suppressed because interest rates have been high for too long. So a change of leadership could be possible in 2026 because of the economic environment and the interest rate outlook.
My last tangent of the year.
Uh-oh.
Speaking of our road trips, do you guys remember Stuckey's?
Yeah, I do
original?
Actually.
Yeah.
I don't know if I ever ate there, but I remember the sign.
Yeah.
Stuckey's.
The original pecan log roll.
Yeah.
Is that good? I don't think I remember this thing.
Is there a Stuckey's in Detroit?
I don't think I don't know if they're around.
Are they around anymore?
Probably not around.
Well, no, wait. That article's from 2025, so they're around.
Yeah, but I think it might be all online. It started, yeah. But that's what my family that's what we used to stop. I wanted to. You guys are talking about the January effect here, and you're talking about stocks that are down for the year.
Yes.
Right. But I think also you got I don't know if you want to include stocks that have fallen from grace and are still up on the year.
Yeah,
And
maybe.
yeah, because I just can't get my mind off this Oracle.
You're all
I
over
mean,
Oracle.
I just I mean, come on. 340 to sub 200 here? I mean, that is a haircut in the most focused right now. AI. I think this stock is a big key. I
Well,
mean,
Tim Seymour said it well. He says, if you push yourself past the balance sheet problems, and that's a scary problem, but if you just like say, they're going to get that, like actually they're going to get financing, which SoftBank was helping them out with that. And, you ignore that they're just spending so much that they could get themselves in trouble. Tim Seymour said, you're basically getting Oracle without the AI stuff because it's given back the whole entire AI rally. So you're getting Oracle to where it was before. Now, there are people that believe that Oracle is spending so much on the data center build that they've actually put themselves in balance sheet problems and this company could potentially go bankrupt. I was like, holy crap. I'm like, that sounds a little bit as far as stretch to me. I do own a little bit of Oracle, but the chart has been ugly. I don't like that it didn't rally yesterday with the SoftBank news. Financing has been an issue and sounds like they're going to get 40 bill from SoftBank and the stock still doesn't rally. That's an issue. But January effect is real. This, we can say, okay, well, it's not really down in the year, so it's not going to have it. But a lot of people are down on this stock. So there could be some tax loss selling in this. So there could be some relief in January for a stock.
It's up on the year,
I think it's a candidate. I think I'm even rating it on the list, Joel. I like your idea. I'm rating it on the list. I want to see this, potentially start to show life though. Next, like Friday, Monday, Tuesday, Wednesday. I want to start seeing life. I don't see life then. Then I'm like, oh boy.
It's up on the year. We talked about this yesterday in the STN room. It's actually up 18% on the year. All things considered with it. I think another candidate that you have to keep an eye on that I know is way down for the year. I just don't know if there's too much headwinds here. This UNH, if you look at the monthly here, this has had a horrible year.
Yeah.
I mean, there's Warren's still in it.
Feel horrible because it's come back a long ways.
Yeah, it has, but yeah, or not Warren. We can't do Warren anymore.
Well, no, let's do that because Brent has actually prepared something here in the background for us because Warren Buffett officially retires today. The best investor of all time officially handing over the reins to Greg Abel from Berkshire Hathaway. And in, the next couple minutes here, we're going to give a little tribute to the Oracle of Omaha.
All right, here we go. Let me see. I jotted down a few cool little stats about the Oracle. Let's start with the good stuff. Warren Buffett net worth as of May of this year was 160 billion. That was fifth richest person on the planet. Warren Buffett became a millionaire at the age of 32 in 1962. He reached billionaire status at the age of 55. Here's a really good one. 95% of Warren Buffett's wealth was earned after he turned 60. How crazy is that?
So you tell me I still have a chance.
You got a chance, Triple D. Yeah, we're good. We're good. Warren Buffett has been on the Forbes 400 richest people list for 40 years. He formed the Buffett Partnership in 1956 and became the chair of Berkshire Hathaway, which he later formed in 1970. His first investment was at the age of 11. It was a company called Cities Services. Do you guys know what stock that was?
No.
That was Citgo.
Oh,
he bought the stock. He bought the
gas
stock
station?
Yeah.
The old gas station?
So that would have been Warren Buffett was born in 1930. So that would have been in 1941. Buying Citgo. He bought it at $38 a share. He bought 3 shares for himself, and he bought 3 shares for his sister Doris. What a nice guy.
Yeah.
All right, now we'll get into Berkshire.
Always a nice guy.
We'll get into he really is. We'll get into Berkshire chart here as Joel pulled it up. Since 1965, since 1965, when Warren Buffett took over Berkshire, the stock has returned 20% on average annually versus a 10% annual return in the S&P 500. 10% outperformance every year for 50, more than 50 years.
It's fairly impressive. Every year? Like all years? No,
On
not
average. No, on
average,
average.
though.
Yeah,
That'd
on
be
average. But it averages out that way.
pretty
So,
good.
I mean, he, like you said, Triple D, the best investor ever
Yeah.
is Berkshire Hathaway as a stock. Moving forward, without the Oracle, we're leaving the reins in Greg Abel's hands. Is Berkshire Hathaway still along after all of this outperformance?
We'll answer that question in just a second here because U.S. jobless claims were down 199,000. Consensus was 220,000 from 215,000 the previous week here. So initial jobless claims down 21,000 to 199,000.
Market not really reacting.
Not really. This isn't a huge economic data point. Is it going to change the Fed's opinion? And they're like, oh my gosh, we better lower rates right away. Probably not. Powell's kind of stuck in the mud where he is, I think, here now. I don't think rates are going in January.
No, I'm hearing not till June.
When the new Fed chair immediately lowers by 100 basis points. Trump's going to be like, listen, if I'm putting you in, when the day you get in there, I want to see 100 basis points lower because I want GDP to go to 25% a year. No, you know what? We want interest rates at 0. Bring them right to 0, and then I'll let you go in there. I mean, there could be that talk happening in the background. So I can promise you, yes, promise, with 100% certainty that the next Fed chair is going to be a dove. That's what I'm giving you. 100%. Nothing's 100% in this world except death, taxes, and the next Fed chair is going to be a dove. That's where I'm at.
I'll go through the Warren. You guys have heard this before. It peaked. It made its all-time high on the Friday when they announced earnings at their annual meeting, and he announced he was stepping down. That was the all-time high. Then you had the Warren premium come out, and it came out pretty quickly, right? All the way down. You went from 542.07 on that Friday. You bought them at 455. That's about $100 move. You've got about halfway back. You're consolidating up here. To me, it's 500. Like for the year, that's going to be the number to hold. We're at 503.72. If this guy's good, we're just going to hold in here. We're going to form some support, then we're going to work our way up to the all-time high. If not, maybe you drift back and maybe be in a trading range for time. This is a monthly chart here, so it just doesn't have to go to 550, and it doesn't have to go to 450, but it definitely in a monthly consolidation period. Apple, which is a big thing. I was talking with Dana about her iPhones and stuff and things like that, and I know, relying on one product and everything is not good, but if they have a next super cycle with their iPhones, the stock.
They got to improve Siri. I mean, we have been using Siri for so long, and I asked Siri something, and she sometimes gets it right, but a lot of times she doesn't get it right at all. So, I mean, we have been on the same Siri forever. So this is literally AI world now. Let's get off the original Siri. Let's get something really cool. Do something for me here. Solve my problems, for me. Not just, I ask a question, it tries to find the answer and sometimes gets it, sometimes not. So, I mean, it's been a disappointment, really. The progression of Siri, I don't think it's any better than it was 10 years ago, Siri, to be honest with you. So I hope the next iPhone Siri is going to have huge, drastic improvements here. But, let's move off this conversation because we want to talk with our guest here. Laura's waiting in the background here, and we're going to talk some stocks. So let's run that intro.
Good morning, Laura. Chico, PhD, Managing Director, Equity Research in the Biotech technology sector. Laura, how you doing on the final day of the year?
Happy New Year, guys. Thanks for saving the best for last year as we close out 25.
Yeah, well, I mean, come on, biotechs, you guys had a rough couple years. I guess individual stocks, we can talk about. Some have had their ups and downs, but what our crew is here for First up, let's start right away. Your top pick for 2026.
All right. The top one we just added to our Wedbush Best Ideas list. This is going to be Viridian Therapeutics, VRDN. And, I think you can sum it up pretty easy. They've got cash, they've got catalysts, and hopefully some commercial rollouts happening all in 2026. So I think this is a super exciting year for these guys. They just got their first drug approval application submitted, accepted, and June 30th is the PDUFA date. So by middle of this year, we could get an approval decision and start rolling out a commercial launch by the second half of this year. In addition to that, though, their next-gen product, they've got 2 phase 3 readouts coming up in the first quarter and the second quarter for that program. And this is all happening in thyroid eye disease, where Amgen has a product on the market right now, Tepezza, and this is at about a $2 billion run rate.
Is this, what's the risk factors here? Because, it's been running up here. Is there a risk, that a lot of this priced in? Is there a risk that, something doesn't get approved? What's the risk factors here, Laura?
Yeah, great question here. So I think one, the veligrotug application, which is in right now, that's their lead product. I think there's a lot of de-risking because it mirrors or looks very similar to Tepezza, which is Amgen's drug already on the market. And we've seen the data, it looks really solid. And I think there's still a lot of need for new products here. So I think we're pretty low risk in terms of the studies met the endpoints. They showed great benefit. Safety profile looks pretty clean. So overall, I think this is probably a low risk to approval. The second product is a subcutaneous pen, so an injection. This first one is an intravenous infusion. Second one is a longer acting one, so you take it every other month or every month with a subcutaneous pen that you can inject at home. That one a lot of people are excited about simply because it's going to be easier to use. And that also looks very similar to these other drugs, Tepezza, veligrotug. So that's, I think, one reason why you've seen it start to run up here is we're getting closer to these events. We've got some de-risking built in. And again, a market opportunity where there's just probably a lot of untapped space so far.
Laura, a couple other ones here that you've got on your list for 2026. Let's go to EWTX. Tell us about the story here.
Yeah, Edgewise Therapeutics. So, they had some data back in early April. And the stock sold off. Folks were a little nervous about one of these potential safety signals on the drug. So this is in hypertrophic cardiomyopathy, or HCM. Bristol's on the market right now with Camzyos. Cytokinetics just got an approval for their drug, aficamten. So very large space and still a lot of room for improvement. We recently saw the stock run up. They had some safety data roll out for Edgewise's drug. And this was a little bit more reassuring to folks. Now we're going to get more detailed efficacy data in the first half of 26 for the cardiac drug. And I think that's another opportunity for that to run up. Later in 26, they've got a separate skeletal muscle program. We get pivotal data there. Like that one, I don't think this is really priced in yet in terms of where the stock's at. So you got a couple upside levers here if good data happens to roll out.
All right, let's keep it going for 2026. BCRX.
Yeah, and this one might be a little bit more of a contrarian take, but BioCryst is a commercial stage company. They've got Orladeyo on the market right now. Management is guiding to around $600 million in 2025 revenue. And this has been trading at a discount relative to the peer group. Trades at about 3 times sales. Peer group's around 6 times right now. So why is that? I think people are really nervous about the longevity of their current drug, Orladeyo. How long is that going to be able to maintain these revenues? And what happens after that? And BioCryst made a really interesting acquisition of Astria Therapeutics, should close the first quarter here. And that brings in another HAE product that's longer acting. This would be a shot that you take twice or 4 times a year. So I think that's a pretty compelling offering. I do think once that deal closes, that might take a little pressure off the stock here. We start to see that move up. We'll have commercial updates already for Orladeyo coming this year. And then a third thing, we have a pipeline program. I think it's a real call option in the stock right now. End of first quarter, we get the first look at this in a rare skin disease called Netherton syndrome. I do think if they get some positive signals there, that'll be a catalyst for folks to start to come into the stock as they start to diversify the story. So really like the setup here.
Okay, let's look a little bit longer term, right? I mean, you're talking about for the year.
Yeah.
That's a good time horizon, but we know investing, especially investing in biotech companies, sometimes you have to have even a longer term time horizon. So, what do you pick for our longer term investors?
Yeah, absolutely. And again, I think there's a lot of hyper focus on, what's coming up in the next quarter, what's coming up in the next weeks. But this one, Jade Bio, it will take a little bit longer to kind of roll out. This was a reverse merger, so came into the market more recently, earlier stage company, but they have an asset in IgA nephropathy. And we've seen a lot of activity in this space. It's a rare nephrology disease. Otsuka just got an approval for a drug that's very similar to Jade Bio's program. But again, this kind of theme of extending the dosing interval is really super important. Right now, they're in a phase 1 study, so earlier studies here, but we'll get the first look at their clinical data in the first half of 26. I do think one of the neat things about IgA nephropathy is that early healthy volunteer data does seem to translate pretty well to what will happen later in patients. So even though it's a phase 1 update, still think this is an exciting one to watch. And this is definitely one that we would have on our radar for a longer time horizon for sure.
It's consolidating. I can say that. That daily chart showing a lot of consolidation here. All right, let's stick with the longer term theme here and go with SLDB, Solid Biosciences Inc.
Yeah, so Solid is focused on gene therapies. And there's obviously been a lot of chatter this year around Sarepta and gene therapies. I think this is one that's been pretty interesting to follow. Their next gen program is showing really good signs of increasing microdystrophin expression. That's the protein that we're missing in Duchenne kids. Ideally, if you can start to make more of that, hopefully that translates to benefits. We've only seen early data on this one so far, but what we've seen is encouraging. We're also seeing lab values improving. So those are all good signs. This year, we'll get longer duration data with the gene therapy kids. Solid is saying they should have about 30 patients dosed. Now, that doesn't sound like a ton, but competitors are actually moving towards approval already with that amount of data. So I do think this is an exciting one. There's other programs that Solid has going on in the cardiac space. They're going to start dosing those people soon as well. So over the course of 26, hoping we get some more data updates. And, just drawing the lens back a little bit in terms of biotech in general and why it can run up. I do think regulatory has been one of the overhangs in the space, but even still, I think there's still a need to get these things going. And FDA will have approved about 49 drugs this year if we turn over the calendar today. That's a hair down from 23, 24, but still above the annual average. So even though there's been more pressure on FDA, I do think they're still being productive given what the resource constraints and everything.
Actually, I wanted to expand into that. Go XBI chart, Joel, and we can just talk biotech in general here because, I like getting your thoughts on the regulatory, but also the environment here. I mean, we know interest rates, started to go down back in, August, September, and XBI has pretty much been straight up since.
Yeah.
Do you think like I've always said interest rates, XBI is very sensitive in interest rates because obviously got to finance these trials. If rates come down, it gets a little bit cheaper here. I mean, I think the outlook for interest rates is probably still lower overall here. And I really think when you look at the XBI chart, I mean, it's definitely interest rate sensitive because 2022 was the peak when they started raising interest rates. Then we went to a 3-year, bear market for XBI. And now all of a sudden, 3 months ago, they start lowering rates and XBI starts to go up. Could you just argue that overall this, XBI is just very sensitive to interest rates?
Oh yeah, Dennis, and you were talking earlier, are we going back to zero? Probably not. I don't know. We'll see what happens over 2026, but it depends on the time frame that you look at when you do the correlations between MBI, XBI, and interest rates. But certainly in an environment where rates are moving down or up, that seems to be when we have the tightest impact on the biotech sector. So, and a couple of things. So we've definitely seen the stock chart go up to the right as we've had these incremental cuts to rates. So even if we get maybe one or we stay at a lower rate in 26, I do think that's going to just be more gas on the fire for biotech. The other, I think, part of driving this higher might have been a little bit of the unwind of the AI trade. We're having the conversations now around, is AI a bubble? And as that's kind of blown up a little bit. I think, if you're looking for other sectors to jump into where there's high reward opportunity, biotech is definitely one that stands out. So I do think a couple dynamics on the macro side probably help us in 26. And maybe another data point there, just capital markets activity in the biotech sector. Numerically, we were down in terms of follow-on offerings, the amount of capital raised by biotechs 25 versus 24. But half of the fundraising activity all occurred in the fourth quarter of 25 right now. So we're heading into 26 really on a strong path here. I think if we also start to see some IPOs, basically you're going to see a lot of money come into the sector here.
Do you think we see more M&A? Do you think because rates lower and, we've got obviously, the weight loss drugs, we're seeing, some companies getting scooped up there. But what do you think for the M&A outlook for biotech in 2026?
Yeah, there were, I think, 26 deals that were announced in 25. And that, since 2020, we've steadily seen an increase in M&A activity. I look at it more from the acquirer side and what do they need? And they have strong amounts of cash sitting on the sidelines in pharma and large cap biotech. It's not necessarily tied to how much they need to spend. It's what holes do they have to fill? And there's still a lot of holes to kind of fill up in some of these pipelines. So short answer is yeah, especially if cost of capital is going down, it totally makes sense. And as biotechs de-risk and get to certain data points, that only helps. So yeah, I think I would look for continued activity on the M&A front in 26.
Joel, you're on mute. He did it.
We're asked about TVTX.
We have a PDUFA coming up for these guys, so a drug approval decision for Filspari, and we've seen the stock chart run up quite a bit more recently. This is Travere Therapeutics, again focused in that rare kidney disease IgA nephropathy or IgAN, and the approval decision that they have coming up is for their drug Filspari. This is another rare kidney disease called FSGS. The real name is super long, so I won't go through that. But PDUFA decision is on January 13th, and there is nothing approved right now for FSGS. And unfortunately, this is a disease where people progress really quickly and lose kidney function, need transplants, dialysis. So there's a huge unmet need in FSGS. And if Travere gets this approval, kind of their market to own for a couple years before competition starts to move in. Now, I do think FDA really wants to get something approved, and we will see competition follow. But again, Filspari will be on the market first and have a good opportunity to kind of roll out. We do think there's good awareness among the physician community already for Filspari's applications in FSGS. So yeah, near term, this will probably be one of the first potential FDA approval decisions in 26.
This one I don't see on your list, ABVX. That's not in your area of coverage.
No, but it's certainly a popular topic coming up. I know a lot of folks are wondering if there might be some sort of deal activity going on right now. So it's certainly one of those M&A candidates that's been in the news.
Okay. Laura Chico, Managing Director, Wedbush Securities, covering the biotech sector. We really enjoyed it. We marked down some of your picks there. We'll be following closely when we talk to you in the new year. Thanks, Laura.
Thank you, guys. Happy New Year.
Thanks, Laura.
Okay, we don't want to end the year in the red. We've had a very nice rally here. We are back at unchanged here. 26 handles off the pre-market low.
Yeah.
What do we got?
The dip is still out there. I mean, again, there's a lot of people who really think, 2026 AI stock's going to rip. There's a lot of people who think we're due for a correction, on the stock market overall, that we're overvalued. Obviously we got Michael Burry coming out last night and saying Tesla is ridiculously overvalued. I mean, we have a lot of conflicting opinions out there, and I don't think anybody knows. Like, again, if somebody says they know, stop listening, because nobody knows anything. So we're all just guessing. We're all working in probabilities here. But I just think with the landscape set up, with interest rates, we know there's going to be a dove coming in as Fed chair in the second half. I think it's just, you can't be bearish when interest rates are going down. Sure, maybe this next few months, like I was saying in the STN room, I think it could be like the same type of year where we struggle through the first quarter. Maybe it's not great. But then we get to like March, April, and, Powell's going away, and then they get excited about interest rates going down. And I think, you could see that little dip maybe first quarter, and then we ramp up for the rest of the year. I kind of think that's where it's going to be, because I kind of think that's where the interest rates, path is going to go. I think we're maybe stable, interest rates not going down. Maybe, market's disappointed that they don't go down for the first, half. And then in the second half, they just start cutting rates like crazy. And it's going to be, off to the races for the stock market if that happens. So follow the interest rate rhetoric. And one thing to consider is Trump has said that he's likely to name the new Fed chair in January. So maybe we get a first couple of weeks, but if the new Fed chair really is like, oh, that's a dove, that might be the catalyst to kickstart the rally as well. So don't be surprised, if that Fed chair announcement kickstarts the market as well. I think you're in store for maybe the first couple of weeks of, and we're popping here, but maybe the first couple of weeks of maybe some profit taking. But then I think the market, I'm bullish for 2026.
And as far as I know, he just said that thing about naming a confirmed Fed chair like 2 days ago. So we were kind of speculating, I think earlier this week or last week, we were looking, when is Jay Powell going to be out? And it's not till like May, but Trump seems like he's going to announce somebody maybe in the next month or so.
We look for catalysts in the market, right? Coming up next week. We don't have earnings for a while until a little bit more in January, but we do have the Consumer Electronics Show, which could be a catalyst. And we have been doing some homework on that. Brett's going to share with us some of the features, some of the companies speaking at that event.
So the event actually starts on Sunday. That's January 4th. It's totally like a preview day. The day is in earnest, where there's going to be a lot of booths. There's going to be a lot of presentations. This is in Las Vegas, by the way, the largest consumer electronics show in the world. Monday, Tuesday, Wednesday, Thursday of next week. There is events happening on Friday, and I'm sure if you're in Vegas, there's a lot going on for like even that weekend, 2 weekends from now. But in earnest, look out for Monday, Tuesday, Wednesday, Thursday. Let me click over to some of our keynotes. We know we have a keynote by AMD's Lisa Su. We know we have a keynote by NVIDIA's Jensen Huang. We know we have a keynote by the Caterpillar CEO, which is, if you ask me, pretty interesting. Dennis, what other highlights were on your radar for CES?
Yeah, I mean, there's, a number of companies that are going to present here, and this is one of the biggest conferences of the year, is kickstarting in January. So AI is going to be front and center here. Obviously, Kickstart with NVIDIA, and I believe the timing of these, I had it written down. Where did I write it down?
I can find it real quick.
I think NVIDIA is right. So on Monday, I think NVIDIA is right off the hop.
That's AMD. That's Lisa Su. Lisa Su is the first keynote on Monday. But because this is Vegas time, Pacific time, she starts her keynote at 6:30 p.m. So that's not going to be till like 9:30 p.m. for.
Are we certain of that? Because I've got NVIDIA, I believe, opening it up, because it's kind of the NVIDIA thing. So I had opening keynote is NVIDIA 4:30, and then I had AMD at, I believe it was 6:30. So
I think you're probably right.
My information's incorrect. So
no, give me 1 sec. I'll double check.
I think NVIDIA opens. Right. I think NVIDIA opens at like just after the close on Monday, and then AMD, Lisa Su's going to speak later on in the evening. But then we're going to get Intel speaking, Qualcomm. I don't know if they have a keynote, but they do have sessions there. So I'm just kind of going through who the speakers are. But Intel is going to speak as well. I don't know what day Intel is. We got to find that out. But Intel's scheduled to speak as well, which is important because Intel can move. And these are catalysts for next week. And then you have other companies that are going to be set up with booths. So, like Waymo, Google's got a big booth. Google's going to be speaking as well. So Google, I do have confirmation that Google will be speaking. CEO, Google is going to speak. Mobileye is going to be there, set up with a booth. I recently bought Mobileye just because of the catalyst for next week. Also, January effect, I think, is probably a possibility there for Mobileye next week. Stock chart's awful looking. I'm just kind of going through some healthcare ones. Abbott Labs is going to be speaking. From a robotics standpoint, and we talked this, I know Rich Tech Robotics is there. I don't believe they're speaking, but they are. I've got, they're an exhibitor there. Again, just going through it all here. That's kind of what we know for certain. So we know speaking NVIDIA, AMD, Intel, Google, and then with keynotes. And then, you know, we have a number of companies with booths there, and they're going to be talking and going through, obviously. So it's a major deal for AI. So this could help AI stocks at the beginning of the week. You know, maybe some people front run this, maybe some people get ahead of this conference. You know, I anticipate that I'll probably be buying some of these stocks ahead of the conference and speaking as well. You know, Intel's probably one with you know, they're going to be speaking, so we'll want to get the date on that one too.
Intel is Tuesday at noon.
Awesome.
Scaling AI in the real world, the infrastructure breakthrough with Intel exec. I'm not sure who the exec is going to be. I want to just say that ces.tech, ces.tech is where you can find all the info, the schedule. And I think what is notable
What time's
is
Intel on Tuesday? I'm writing it down.
Intel is at noon Eastern time. It's at 9 a.m. Starting the day off, on Tuesday. Yep.
Where are you getting this?
ces.tech, www.ces.tech, TECH. There's like a schedule. You can scroll through the schedule. There's a bunch of days at the top. And I want to just say, look to when you're, I would encourage people to look through the schedule and see if there's stuff you might be interested in from a trading/investing perspective. Look if you can find on the ces.tech website the exec or company team member that is going to be speaking, because that could make a big difference. Yeah. If Jensen Huang is speaking, or, you know, NVIDIA's sales head, I'm sorry to the salespeople out there, you're going to care more about Jensen Huang speaking. Serve Robotics was the one that we were trying to figure out if Serve was going to be presenting or having a booth. And I was looking at this a bunch in the last couple of days. And like, for example, Serve's head of advertising sales seems like they're going to be the person from the company that's there. I'm sorry to the head of advertising sales. That's not the CEO. That's not the CFO. That's not a product person. So I'm kind of deprioritizing that a little bit as an idea.
So looking through, I'm looking through the schedule here right now. Actually, you can bring this up if you want. Show it, Brentster, while I go through it as well, if you want to grab a hold of it, because the keynote. So NVIDIA opens. Keynote AMD is at 6:30. This is obviously Pacific time, so that is actually 3:30. No, or is this in Eastern time?
No, it's in Pacific.
It is in Pacific time.
Yeah.
Okay. So that changes things so obviously, you know, the time zone. And then, like you said, Tuesday we've got Siemens and Intel. Where is Intel? I don't see Intel on here.
It's not a keynote, so it's not on there. So it makes you, it kind of makes
Wednesday's
you
Caterpillar. And you know what? We had this talk in the STN room about Caterpillar. And we're like, well, what's that? AI? Autonomous equipment, man. It sounds pretty cool. I mean, imagine not having to hire some, you know, or some of your excavator, like crane operators, your excavator operators, all of this stuff. I mean, those guys make a lot of money. So you'd save a lot of money using the autonomous equipment. I think it's going there. So is Caterpillar an AI play? I think it is, actually. So
they're trying to make the case.
Caterpillar's going to speak at 9 a.m. So they're going to speak early, which, if that's in Pacific time, that's 6 in the morning. So
wait, no, you're doing
Wednesday.
You're doing the other way. If it's 9 a.m. Pacific, then it's noon, right?
No, 9 a.m. Pacific is going to be 6 a.m. our way. Yeah, they're 3 hours after us. No, you're right. I'm doing it backwards. You're right.
Here's the keynote.
You're right. I'm going backwards. These time zones, they confuse you. I'm getting old. Correct.
Here's the keynote page. It is ces.tech/attend/keynotes. Little quick preview. Here's the AMD. So this is at 6:30 again.
So that'll be 9:30 at night.
Exactly. And also, I mean, does the timing matter? I think it kind of does. I mean, yes, this is prime time for if you're at CES in Vegas, but I mean, also, I don't know. Is Lisa Su going to be giving huge blockbuster game-changing information at like 10 p.m. for Eastern time? I don't know. I'm not that convinced. You know what I mean?
Somebody's saying it's only a 2-hour difference right now because of where is this? This is in
This is in Vegas. Is Vegas Mountain?
I don't know if does Vegas do daylight savings time? I think
they
it's
do,
3 hours still.
Yeah.
I think it's still 3 hours difference. I'm pretty sure it's 3 hours. Because if you were in like Phoenix, they don't do daylight savings time, so it's only 2. But it's 3.
Vegas
does
3 in Vegas. Yep.
It's 3. So yeah, we're right. So Caterpillar is going to be
noon on
Wednesday.
Wednesday. And again, these are just the keynotes. So like we're not getting past Wednesday. They're only giving these keynotes, the ones that CES is highlighting, Wednesday, Tuesday, Monday.
Yeah. Okay, this is fantastic information, Brent. So obviously it's going to be a big catalyst for next week. So, in closing, lots of catalysts for next week. Obviously, this is the last day of the trading year. So if you want to realize those tax losses, you got to do it today. I do expect some changing of the guard, temporary changing of the guard to start maybe even on Friday and into next week. So keep that in mind. But then you have this NVIDIA conference coming up, and that's not changing of the guard. That's what everybody wants to hear. So, I mean, maybe we kickstarts us too. So lots of catalysts to consider. The big story of the morning is indeed Nike CEO buying another $1 million or buying $1 million worth of stock in the open market, and that's got that stock going too. So any other closing thoughts, Mr. Elconin?
No, we just kind of a quiet day here. We came well off the that pre-market low, so that looks like that's going to be holding up and working our way up here in the green. Nice turnaround. Kind of had like a sneaky 2-day losing streak, but looks like not much damage was done at all. We're off to about 40 handles off the high of the rebound. No great shakes here, folks, but it was fun. It was a fun here. We had a lot of excitement, a lot of things to talk about, and setting up for an exciting 2026.